And I think the commercial banks are trapped and scared, and they understand this. They understand that, like, if they try to cover on COMEX, it just pushes up the price on the LBMA. Every dollar increase in the price of silver is a $4 to $6 billion loss on those banks' balance sheets. At what point do they continue to short so that more people say, okay, we'll stand for delivery at these stupid prices? And then when do we get that ultimate default, which then pushes the price to the moon as everyone tries to cover, or it just blows up the system? So ultimately, we probably progress towards a more realistic ratio between price and mine supply, or in the ground.
The manipulation of silver prices has become a hotly debated topic in the precious metals sector. It's well known that the silver market, like other precious metals, has been subject to significant interference from major financial institutions, often referred to as bullion banks. Notably, giants like JP Morgan, Goldman Sachs, and HSBC have faced substantial fines in recent years for their role in manipulating these markets. Despite these penalties, silver has struggled to reach new price highs in over a decade. Historically, silver has moved in tandem with gold, often outperforming it during bull markets. However, while gold has set new price records multiple times this year, silver has lagged behind, missing out on the same momentum. According to Andy Schectman, president of Miles Franklin Precious Metals, the situation with silver in 2024 is far more complex than most realize. In a recent interview with Stacking Surfer, Andy highlighted a critical but often overlooked factor: the gold-silver ratio. This ratio is hovering near historic lows and is significantly detached from what Andy calls God's ratio. He views this as a troubling signal, suggesting a major market shift is on the horizon. Andy argues that those invested in silver stand to benefit significantly when this market correction occurs. He also emphasizes that the manipulation of silver prices runs far deeper than most investors understand, hinting at a broader systemic issue that could soon unravel. He warns that this unraveling has already begun, with countries like China, Russia, India, and Saudi Arabia heavily investing in silver, taking advantage of Western price suppression. According to Andy, when the unraveling reaches full force, bullion banks will face massive losses as these countries will demand an immediate revaluation of both gold and silver, effectively ending Western price suppression. In this video, Andy Schectman discusses the alarming price and mining ratios for silver, highlighting the discrepancy between the market price and its actual supply dynamics. With a price ratio at 85 to 1 and a mining ratio at just 7 to 1, something is clearly amiss. While the ratios don't need to reach parity, they should be much closer than they currently are. He emphasizes that over the past 6 years, there has been a staggering deficit of 1.1 billion ounces of silver relative to demand, with an additional 265 million ounces shortfall anticipated this year. This figure doesn't even factor in military applications, which have been notably excluded from the Silver Institute statistics. Schectman points out the dramatic increase in the M2 money supply, which has surged 14 times since 1980, yet silver is trading at a 40% discount compared to its 1980 high. He further highlights the scale of silver trading, noting that 2.9 billion ounces are exchanged on the London Bullion Market Association, LBMA, daily, 3.5 times the annual global mine supply. The issue of short selling by bullion banks is also addressed. Schectman criticizes these banks for holding short positions amounting to 4 to 6 billion ounces of silver, supposedly available for delivery. Unlike regulated exchanges like COMEX, the LBMA operates in a much less transparent environment, making it difficult to ascertain the true availability of silver. He raises the critical question: what happens if all those who hold contracts decide to stand for delivery? Currently, there are only 300 million ounces of silver unaccounted for on the LBMA. The ongoing situation is compounded by significant demand from countries, particularly in the Global South, where there has been a surge in silver purchases. For instance, 88.1% of the available 300 million ounces were delivered in August alone, raising questions about who is buying up the silver. Schectman highlights China's aggressive acquisition strategy, where they are purchasing unrefined silver, including door bars, directly from miners, often at prices that undercut traditional refining processes. As the largest or second largest silver producer, though they don't disclose exact mining figures, China's actions indicate a strategic shift in the global silver market. Looking ahead, Schectman foresees a critical turning point where price discovery in silver will be forced upon the market. This could occur through a failure to deliver on the LBMA, potentially triggering a massive spike in silver prices. He notes that exchanges like COMEX have rules allowing them to cash settle deliveries, which could effectively result in a default. As global silver demand accelerates and countries like Russia openly acknowledge their intentions to stockpile silver, the future of the silver market appears increasingly precarious and volatile. In Andy Schectman's video, he highlights a significant technical analysis for silver, revealing that the metal has formed a massive cup and handle pattern stretching back 44 years to 1980. This bullish continuation pattern typically signals a potential upward breakout. When seen on long-term charts, like silver's multi-decade performance, it suggests the possibility of a major price surge. What makes this pattern particularly noteworthy is its scale and duration. Analysts are referring to it as the granddaddy of cup and handle formations, dwarfing similar patterns observed in recent history. Such a long-term structure could indicate a strong breakout if technical indicators align with broader macroeconomic factors like inflation, interest rates, monetary policy, or the demand for safe haven assets. Several factors, rising inflation, potential currency devaluation, geopolitical tensions, and central bank monetary policies, are creating conditions that could further boost demand for precious metals like silver. If these economic pressures persist, the breakout from this long-standing pattern could be intensified by both technical traders and investors looking for safe haven assets. In his latest video, Andy Schectman discusses a remarkable 40-year cup and handle formation in silver that he describes as unprecedented. For those unfamiliar with technical analysis, this pattern is considered one of the most bullish indicators. He emphasizes that both gold and silver exhibit this formation, with silver potentially showing an even stronger signal. Schectman points out that the reason countries aren't openly complaining about rising prices is that they are the ones buying up these commodities. They've managed to leverage their position against the West without resorting to military conflict. Instead, they are strategically navigating the market, focusing on delivering commodities rather than just trading in fiat currencies. He highlights a significant shift happening in the market, moving from a system reliant on debt to one that is transitioning toward a commodity-backed ecosystem. This shift will become apparent during a non-delivery or cash settlement event, exposing the flaws in the current Western pricing mechanisms. Using the COMEX as an example, Schectman explains how contracts are often rehypothecated, meaning that multiple parties believe they own the same asset, but only one can truly claim it at a time. In contrast, he describes the Shanghai Metals Exchange, where a more reliable system is in place, requiring buyers to obtain a physical bar before trading. This lack of integrity in the Western markets, fueled by rehypothecation and naked shorting, has obscured the true value of commodities. While many in the West may not grasp this reality, countries like India, China, Russia, and Saudi Arabia are capitalizing on it. Schectman views this situation as a rare investment opportunity, driven by factors such as supply and demand imbalances, reporting inaccuracies, and widespread accumulation by nations that are leveraging these dynamics against the West. He encourages viewers to consider this moment seriously, noting that while some may dismiss his perspective as self-serving, he believes it represents a unique chance to invest in undervalued assets. Ultimately, Schectman asserts that while the markets can remain irrational longer than we can remain solvent, the laws of mathematics, logic, and economics will ultimately prevail, though the timing and nature of that resolution remain uncertain. Andy Schectman, alongside prominent bullion dealers like Jim Rogers and Rick Rule, views silver as the opportunity of the century, driven by several key factors. Firstly, silver supply has been constrained while industrial demand, particularly in renewable energy, electronics, and electric vehicles, has surged. Its critical role in technologies like solar panels and electronics, due to its high conductivity, positions silver favorably as green energy and digitalization expand. Secondly, the gold-silver ratio, currently near historic highs, suggests silver is undervalued relative to gold, a disparity many investors see as anomalous. Experts anticipate a correction in this ratio, potentially favoring silver in price appreciation. Like gold, silver serves as a hedge against inflation and currency devaluation amid volatile fiat currencies and escalating global debt. Moreover, silver faces consumption in industrial applications that outpaces mining, leading to concerns over depleting above-ground stocks. Analysts foresee potential supply shortages, potentially driving sharp price increases over the long term. Lastly, discussions by analysts, including David Morgan and Andy Schectman, hint at a possible silver mania phase where price manipulation could cease, leading to significant upside for long-term holders. These factors collectively suggest that silver presents substantial long-term investment potential, appealing to investors with a horizon spanning generations. What are your thoughts on the intrinsic value of gold and silver? Do you share Andy's outlook on the potential end of silver price manipulation? Let us know in the comments below. For more insights like this, subscribe to our channel, hit the notification bell, and explore our other videos. Thanks for watching.